Hello, guys. Hello, Marco. How are you this afternoon?
I'm good, Nate. How are you?
I'm doing well.
Good. Got my coffee. I'm ready to go.
Cheers. Cheers
Cheers
me
to you
too,
too.
to my blurry background.
I
Uh,
like it. Mine's clear.
I like that view you have over the rolling hills of Laguna Niguel there. Looks like we
Yeah.
still have some participants coming on board here, which is good. People are logging in. So we'll give it a few seconds here. And I appreciate everyone. I'll go ahead, Marco. Go ahead.
I'm gonna just stand up and adjust this light for 1 sec so I get
Sure.
better light. Okay, 1 sec.
All right, we've got some more people joining up, which is great. Hope everyone's afternoon is going well there.
All right, Nate, I'm back. I think that's better.
Perfect.
We'll go with it.
Perfect.
Okay.
All right. Hope everyone's fourth went well, guys. It was a hot one. It was pretty nice here in Southern California. So wherever you guys are joining us from, hopefully you guys had a wonderful 4th of July. If you guys are new to the web, maybe you've been on these webinars before, maybe you haven't, please bear with me today. I am dealing with a sinus infection, so I sound a little bit like a foghorn, but that's okay. Um, what Marco and I do is every other week, we usually jump on these webinars here. We do some live Q&A. We walk through frequently asked questions about Norada Capital, just to give you guys some more feedback on how things are operating here. So today we're going to do some FAQ. I'm going to basically be interviewing Marco. And for those of you who have never jumped on or don't know who I am or Marco is, my name is Nate Hall. I work with Norada on both sides of the fence here. I work with Norada Real Estate Investments, and I also work with a fund here at Norada Capital Management, just supporting investors, answering questions, getting started, things like that. And I've also had fun kind of taking on the role of helping host some of these webinars, which is fun. And I appreciate Marco for allowing me that opportunity, and also, for those of you who don't know Marco, I'll kind of let him take the mic here for a second and give a little bit of a background there, if you don't mind, Marco.
Yeah, I guess if you're asking me to do an introduction for
Why not? Why not?
Sure. Yeah. Long bio short. I became an entrepreneur at an early age. I was in my mid-teens. I got involved in real estate investing when I was 18. I bought my first rental property, so that's kind of when I jumped into the fray. But I've always been entrepreneurial and excited and loved businesses, scaling a business, investing in real estate, dabbling with other asset classes early on. But I went full-time into real estate investing in 2003, and then started growing a portfolio at that point in time. And then over the years, I got involved in all kinds of investments, from oil and gas to crypto to you name it. But most of my focus has always been involved with investing in real estate, not only for myself personally, but for other people as well. And that's where we built Norada Real Estate Investments. And so it was basically all my lessons, trials, and tribulations that fell into that business model 20 years ago, helping other people basically navigate investing nationwide, regardless of where they lived, even internationally. But then as the years went by, I got involved in other asset classes and other investments, including promissory notes, and then ultimately started building a fund, which is what we're talking about here today. But yeah, I'm very well diversified, including Broadway theatrical productions, which will probably end up being part of this conversation today as well. So that's a quick overview, but that's essentially my background.
Yeah, I love it. I'll add to that. I mean, you obviously have a big name in the real estate world with not a real estate investments, but you've consistently grown and acquired and been partner and equity owner in companies for several years now as well. So the other side to that coin is the growth of businesses, right?
Right.
So that's what we're going to discuss today. And so what we're going to do, guys, kind of the format for today is I'm going to be asking Marco some kind of frequently asked questions that we get from a lot of clients. And then towards the end of the kind of a 30-minute segment here, we'll kind of open it up to see if there's any other questions from any of our participants here. So does that work for you, Marco?
Yeah, no, that's perfect.
Perfect. So what we'll do is we're going to dive in here, guys. And for those of you who are new and you want to understand and learn how the fund actually operates and works, that's going to kind of kick it off. It's going to be our first question is, Marco, if you're talking to me and I'm a layman, I'm coming on board here. How does the fund work? How does Norada Capital work in a sense? It's kind of general, right? But if you can get an overview, that would be fantastic.
Yeah, it's kind of a two-part answer, but really one and the same. So if you're from the inside looking out, Norada Capital is essentially a PE firm, a private equity firm. It invests in other businesses, other ventures, whether they're acquisitions or startups and businesses that you grow and scale to become viable businesses. And so we've got our hands on both. And we'll talk a little bit more about that later. But essentially, from the inside looking out, it's a private equity firm. Its goal is to amass profitable, viable businesses on its balance sheet to grow its value and to grow its cash flows and to grow its equity as a holding company. From the outside looking in, meaning you as an investor looking in, it looks like an investment fund. And for all intents and purposes, you can call it a fund because we are raising capital through issuing promissory notes, which is a debt instrument. So you being the lender, us being the borrower, we raise that capital, we put that capital to work to grow, continue to grow and scale our existing ventures and or to make new acquisitions, which we're not doing much of anymore today. We're kind of past the acquisition stage now. We're focused on strengthening and growing our existing portfolio. So from the outside looking in, we're an investment fund. We're providing an opportunity, an offering to invest in a promissory note that pays a fixed rate of return, an attractive fixed rate of return each year. So that's kind of the way to look at Norada Capital at a high level.
Love it. And that goes into one of the questions we're going to cover today is, what does Norada Capital ultimately invest in? We talk about the outside looking in, right? If I say, hey, Marco, I have, $50,000, I want to invest with you. Where is that capital going? What businesses has Norada Capital acquired or founded or started, to utilize that capital for the growth of those companies?
Well, at a high level, it's 5 categories. We break them down into e-commerce based businesses, what we call educational masterminds. We have some, to a lesser degree, real estate based businesses, a media company, and we have some theatrical productions. There's actually a total of 7 now, going on 8 existing theatrical productions that on Broadway that are doing well. And then to a much lesser degree, we have just kind of a very small sliver in that pie of crypto assets. So we have a crypto venture and a couple of crypto assets, and these are just a very small holding on the balance sheet. They're essentially an inflation hedge with a high potential alpha. So they do definitely have this very strong long shot, but that's a long-term horizon. It's not a short-term horizon. So those are the categories, basically 5, if you will.
So 5 categories: e-commerce, some real estate, we've got theatrical productions or media, we've got a small amount of crypto, we've got some land development. For today's call, we can certainly go into this on another call. We don't have to dive too deep into each category, but is there one category maybe that you'd like to make a side note on or hit, and for our investors say, like, what would you say right now one of the biggest growing businesses that our equity owner partnering is at the moment?
Right. Yeah, the one I like to focus on because it is, to me, the most exciting. It has the highest growth potential, growing rapidly now, but has the highest growth potential both in terms of cash flow and equity, are what I refer to as educational masterminds. Right. These are education businesses, but they're essentially masterminds. There's 4 of them, but 2 in particular are what we are focused on heavily right now on a nationwide basis. We have events going on each month called Aspire. It's our Aspire Tour. The next event's coming up next week in Ontario, California. The one before that was in Denver, Colorado. We had 1,500 people. Our Dallas event had 2,000 people. These Aspire events are really the top of the funnel from a marketing perspective. This is where we drive people in give them tons and tons of value, lots of education. We want to basically, 10 times their investment in terms of value. And at these events, I'm kind of giving you a long answer to a shorter question, but it's important to kind of paint the picture of the beginning of this funnel, if you will. We have people like Kevin O'Leary or Marcus Lemonis from The Profit on CNBC. We've had A-Rod, we've had Jordan Belford, all kinds of great people. In our New York event coming up next month, we have Barbara Corcoran as well. So just, all kinds of great speakers and educators. So we bring them to our Aspire event, one per month typically. And from there, people who are interested buy into a 3-day masterclass, which we deep dive into a lot of educational content. And then from there, we sell them the opportunity. I shouldn't say sell. I mean, we are selling, but we give them the opportunity to buy into a 1-year mastermind, which provides them tons of content on a weekly and monthly basis, as well as live events they can attend. There's just a lot of value there. So that model is working very well. And it's not a new model for us. It's actually a model that's been proven pre-COVID for years. One of my business partners has sold literally hundreds of millions of dollars of memberships from Stage. And we're just now taking that same model and rebuilding it. So there are 2 masterminds that I'm heavily focused on with my business partners. One is called Money Is. It's the Money Is Mastermind. And then the other one is called Think Realty. A lot of people are going to be familiar with that brand because it's been a magazine, I think for about 10 years now, maybe more, that we have now converted from being just a publication and a live event business to becoming a mastermind education model. And so those 2 businesses are growing rapidly. Our 12-month pro forma is showing about a $60 million top line revenue on each of those with about a 45% profit margin. And so right now, those businesses, the mastermind businesses, represent about 55% of our funds holdings. For obvious reasons, it's something that we're aggressively growing and scaling just because of not only its equity growth, but its cash flow potential. So those are the things that I actually like to talk about a lot, or the most, is just because we have such great educational masterminds. Now I will mention real quick, there's a third mastermind that's not directly related to those 2, and it's our 5-star traditional mastermind called Power Room. And for anybody listening who's interested in finding out more, you could simply go to the websites like powerroom.com. And then you can learn about that 5-star mastermind. There is a qualification process to become a member. We just don't let anybody in, but that's also a lucrative business for anybody who understands mastermind businesses.
Yeah, I love that. And what I like that background, about that background is that it gives people a basis for what their capital is doing, right? When a lot of people come on board and they say, hey, okay, I'm investing in a $100,000 note with you. What's that capital doing? As Marco said in the beginning of the call, we're expanding, growing the existing portfolio of companies. Those companies are a good viewpoint on what we are growing, right? So with that said, I kind of skipped over one basic question there. So in regards to promissory notes, right? We get this question a lot. What is a promissory note? If I'm going to create a note between Norada Capital Management and myself, can you answer that basic question for us, Marco? What is a promissory note?
Yeah, I mean, it's very simple. For those that don't know, it's simply a loan agreement. In fact, there's really very little difference between an actual loan agreement that says loan agreement and a promissory note that says promissory note. The loan agreement typically has a lot more language and verbiage. It's a thicker document. But a promissory note is really just an agreement between 2 parties, a borrower and a lender, and it lists the terms, the start date, the end date, the maturity date, essentially, the rate of return, which is typically an interest rate, and how that's paid, whether it's paid monthly, quarterly, annually, if there's one balloon payment at the end. So these terms are defined in this loan agreement or borrower's agreement, which is called a promissory note, and that's all it is. Businesses use promissory notes literally every day, all around the country, probably by the tune of tens of thousands, from everything from hard money lending on real estate to small businesses, new ventures, even expanding businesses that need to raise capital. private capital, not giving equity, like selling shares, but just raising capital for whatever purpose. Could be project specific, it could be based on the growth of that company. They're just needing to borrow capital to grow or make an acquisition, whatever it may be. But promissory notes are literally used every single business day around this country. And so it's really just a loan agreement. It's called a debt instrument. It's just an agreement between a borrower and a lender, and it just lays out the terms. And that's how we raise our capital. It's through a promissory note. We have a couple different versions of it, depending on what the investor wants. But at the end of the day, it's a term at a certain rate being paid in on a certain schedule or frequency. Yep. Until that note is either amortized, which means it's fully paid off, or if it's an interest-only note, it's interest every month until the maturity date, at which point your principal is repaid in full.
Love it. And let's talk about that. As one of the questions we're going to talk about is kind of what backs a note, what's the rate of return, the different options. So if I were to lend money to Norada Capital Management, can we talk about the actual offering itself, the terms, the interest rates, things like that?
Yeah, so there's two questions there. So let's start with that. The way we structure the rate of return is very simple. It's either 12% per year, a fixed rate of return, or it's 15% per year, a fixed rate of return. It doesn't change or fluctuate. That amount is based on the invested amount. So any investor investing up to 100,000 is at 12% per year. That's paid monthly. It's a direct deposit or an ACH payment right into your bank account. So you just receive it each month. Investors that are at 100,000 and above, it's 15% per year, again, paid monthly until the maturity date, at which point it's fully repaid. There was one other thing I wanted to say about that. Investors that are at the $200,000 level and above will, until further notice, will receive a 5% bonus interest on the maturity date of the note. So you're still receiving 15% fixed per year, paid monthly as a direct deposit into your account. But then at the maturity date of the note, you'll receive your principal plus an extra 5%. So call it a kicker or a pot sweetener, whatever it may be. We're essentially trying to encourage investors to stretch or reach for that 200,000 or above. And they don't have to do that at one time. They can start off with, a $50,000 or $100,000 note, and then add to it 3 months or 6 months later, and we can essentially pay off the first note and reissue a new note with the higher amount, so they can take advantage of that, that 5% bonus. There was one more thing I wanted to say about the monthly payments. They're scheduled.
Go ahead. I can add to that as well if you need.
Yeah, no, go for it.
So I was going to say as well, guys, there is an option. So we have several investors that utilize multiple investment vehicles, rather. The investment instruments that note, but we have a lot of clients that utilize solo 401ks, self-directed IRAs, business checking accounts, trusts, personal checking accounts, right? So you can utilize an range of investment, vehicles here to create a note, right? A lot of our retirees use self-directed IRAs. If you want more information on that, certainly have a conversation with me or with John or with Michael, a couple of our investment counselors there. But those, when we pay out those monthly distributions, as Marco talks about, they go directly to your self-directed IRA or the checking account of your choosing or your solo 401k. So,
yeah, you took the words right out of my mouth, because I was going to address how good this is for self-directed accounts. Yeah. Whether it's an IRA, 401k, a solo, a Roth. Promissory notes are great because they're simple and easy, relatively speaking, compared to other investment options. They're easy to understand and they're rather simplistic. So they're perfect for self-directed accounts, and they plug right in. And pretty much every single custodian or trust company around the country has no issue. They just love working with investors that are using promissory notes, because it's an easy fit. There are no UBIT taxes, there's nothing complicated. Yeah. It's just, almost like plug and play, to use that phrase, plug and play, but essentially that's what it is. Now, kind of part B to your question, or the second question that you were essentially asking me about, what backs the note, because, this is a question we get asked pretty frequently. That really comes down to the question of whether the note, or any note for that matter, is secured or unsecured. Let me quickly define that. An unsecured note means the note is not directly attached to any one asset. There's no collateral per se that the note can fall back on. A secured note, much like, for example, a mortgage note, whether it's a house, a car, or a boat, or something like that, there's typically an asset, often a house, that's attached to the note, which means if the note is in default after it goes through whatever proceedings are necessary to go through in order to make that note not whole, but basically get it back on track. There's a term I'm looking for. I'm just drawing a blank. But essentially, if that note is in default, after a certain period of time, the note holder can go and collect on the asset. In other words, they can take the asset back. With real estate, it's essentially a foreclosure or a trust sale. Where you have a trust deed. You can collect on the asset with a secured note. Now, sometimes I get the question, well, which is safer, which is less risky? It really comes down to, it depends what is backing that note. Like if it's a note that's secured by a piece of real estate, sometimes it's going to take you time and money and some brain damage to collect on the asset. And once you've collected on the asset, call it a house, maybe you were lending money on a fix and flip, meaning that you were lending money to a rehabber who was acquiring a distressed asset. They're going to fix and flip it back into new condition or refinance it, but essentially they're going to basically pay you out with your profit. In situations like that, if that is not renovated, in other words, if it's not a saleable or refinanceable asset, once you collect that collateral, well, now you're going to spend more time and money and brain damage to get that into a refinanceable or resaleable condition to get your principal back out. So that's to say that secured notes don't necessarily mean that they're better or safer. With an unsecured note, you have to look at what is the underlying assets, not necessarily what's attached to it from a collection perspective, but what is the foundation. So just to use us as a quick example, we have a portfolio of 25 or 26 different business ventures that underlie the note, meaning that our portfolio, what's on our books with these businesses and assets, are the foundation behind or beneath those notes. So even though they're not directly connected to the note, they are essentially the foundation. The other benefit, if you will, for the investor is that the note is not attached to one particular business or asset, which means that you benefit from the growth of the entire portfolio. Some of these ventures grow faster than others. Some of them are, kind of in neutral, they're stagnant, we're restructuring. But that means that you're benefiting from all our collective efforts and the growth of all of our ventures at the same time. So from that perspective, you can make the argument that it is theoretically, certainly, less risky, quote unquote, to have an unsecured note backed by a large portfolio of assets rather than one single asset that you're relying on maybe one person or one party to make good, renovate, sell, whatever it may be. So long answer, but essentially that's the difference between secured, unsecured, and the potential benefits or downsides of each.
Yeah, I think you make a really good point that we're not directly tying your note to the success or stagnation of one business, right? Because cash flow positions change and things can shift within companies. So I think the benefit of having all 20 to 25 companies support the Norada Capital is great for the investor. So,
yeah.
All right. So lastly here, this is always a question we get quite a bit. And I understand it because I've been in the real estate world for a decade. I've been around syndication deals and I've seen private money raises quite a bit. Private money raises typically offer double-digit returns. We can borrow money for a flip at 12% hard money. We raise money at 12 to 15%. Is there a reason Norada Capital is willing to raise money at higher rates at the current moment?
Well, everything's relative. I mean, I've seen many offerings that had no offerings of 15 to 20 and even 25%. I've participated in some of them. So it really depends on what the offering is, what's behind it, the people that are behind it, the profitability, and the length of time. So there's many factors that play into it. Often, non-accredited investors are not privy to opportunities that provide double-digit returns, whether it be in terms of interest or the internal rate of return, such as you find on real estate, with a 5 or 7 year holding, whatever it may be. It's not uncommon. It's just uncommon to a lot of people who are not in the right circles or in the right know or have the right contacts or the right network. But I've seen opportunities like this for well over a decade. They're out there, and they come by fairly frequently. I don't obviously invest in everything, but they're out there. So it's not that unusual. But more specifically to your question, the reason we would, or anyone would, offer a double-digit rate of return like 12 or 15% is because, number one, they need to raise capital that they can't qualify from institutional lenders like banks or other institutions that have a long checklist or criteria that you need to meet in order to qualify for that financing. In other words, you have to fit sometimes inside a very tight box when it comes to banks and lending institutions in order to qualify. So and this is true for startups as an example, a startup doesn't have history. They don't have 2 years of tax returns and financial statements to be able to qualify for financing. So they have to raise money or capital from private lenders, private individuals, the private market, not the institutional market. So that's why people are going to raise capital the way they do, and they're either going to give up debt, like raise capital in the form of debt, or they're going to sell shares or equity in order to get that capital, or sometimes it's a combination of both with a convertible note. But it's usually to raise capital, raise it relatively quickly, and bring in individuals who are private individuals, not institutional lenders. That's kind of like a long and a short answer all at the same time. But really, it's because you need to raise capital, a certain amount, in a relatively short period of time, and you don't have the ability to go to banks to raise the capital because you are essentially bootstrapping a business, making an acquisition, growing a business. You just don't meet the criteria of a lending institution. That's the bottom line.
Right.
But it's also, having said that, it's a very, very, very common way for small businesses, even large businesses, but businesses in general, to raise capital. It's issuing an offering to raise capital either through debt or equity, and they do it in the private market. They don't do it through institutions.
Yeah, I think to add to that, it's important to know that this is not your first go around in terms of offerings, right? You've been doing promissory notes since 2012, mainly in the real estate world. This offering's been open for 3 years. And I don't think the goal of Norada Capital is to indefinitely raise money for 12 to 50%, right? This offering is not going to be open indefinitely, or probably another, what would you say, 18 to 24 months, I would think, possibly, until there's a certain amount raised. And the goal would be, I would think, to be self-funding moving forward, correct?
Yeah, you actually answered your own question.
Yeah.
You took the words out of my mouth. But yes, this offering will not be on the table indefinitely. That's just not going to happen. In fact, we already have somewhere in the next 18 to 24 months, we're going to maybe not necessarily take it off the table entirely, but definitely scale it back pretty significantly, because we're going to be at a point where a lot of our ventures are not only self-funding, but we need to deploy the profits from those ventures. And so that will go towards paying off the existing notes, and continuing to grow and scale the existing ventures. So it's kind of like a chart where the capital raise is going to taper off and then scale back, where revenues are continuing to grow up. So yeah, there's definitely a tipping point and a tapering off period, and that's going to happen approximately 18 months from now. So this is on the table now. It's not going to change for the next 18 months, certainly not the next year. But it will go away. I mean, or it'll morph into something different. Like if we have a need to raise capital at that point in time, like call it 2 years from now, we will change the offering and do something different.
Yeah. So going back to that brings up a good point. Going back to when we were talking about the promissory note itself, the interest rates, the terms, we talked about, interest. Let's say we do an interest only 3-year term. Okay. If you do a 3-year term and the offering closes in 18 months, am I still making my 12% or 15%, for the rest of that term? I guess that's a question posed to you.
Well, the note terms are the note terms. They're not going to change.
Perfect.
If someone invests in a 3-year note, they're going to continue to get their monthly interest payments
Yeah.
at the beginning of the month until the note is paid off. So that doesn't change. Full disclosure, side note, there is language in the note where Norada Capital retains the right to pay the note off in whole or in part without penalty. Have we done that? No. Do we intend to do that? No. Can we do that? Yes, if the need arises. But our intention is not to pay the notes off early. We do want to fulfill the notes to full term, but we do have that option in the note if we need it.
Sure. I think that's good to know. All right. Anything else here, Marco? Well, I'm going to get into questions here in a second. We have a few questions we can go through. Anything else we can hit on here or discuss prior to jumping into questions?
You'll probably close with this, but we've got a team of 3 investment counselors like yourself that can deep dive and go down, any kind of track or path you want to go. So whatever we don't cover today, certainly give us a call, email us, or contact our team. We have a team here to basically answer questions and deep dive. There's nothing really complicated about, what we have available here, but granted, everybody's going to have a different set of questions. And so whatever we can't cover here in the 45 minutes, we'll certainly, cover one-on-one with you. You could talk about this later, Nate, just how to get a 15 or 30-minute appointment scheduled with you guys.
Yeah, you bring up a really good point. That's exactly why I'm here, why John here is, and why Michael's here, is to answer questions and get the process started with you, right? So you guys can go to noradacapital.com. You can, click on you can schedule a call link directly through the website. It's quite simple. We'll talk about that in a second. All right, we've got some decent questions here, Marco. I guess I can certainly fire away on some of these if you'd like me to ask them directly from the chat. It's a good question. How do we make money through the masterminds? Can you walk through the numbers at a high level, like a single event? I think we actually walked through that already a little bit earlier on the call, but it's a good question.
We did. I actually like this question. So yeah, this is kind of like, this will open your eyes, but I'll keep it certainly high level. So there's basically 3 points in our funnel, if you will, when it comes to the Money is Mastermind and the Think Realty Mastermind. So most of the people who come into these masterminds come through our Aspire events. You can learn more at Aspire Tour, TOUR, the Aspire Tour, but just aspiretour.com. And you can see the different dates. This website changes somewhat frequently because we're booking new venues, and actually we're having conversations this month about 2024, the venues and cities that we're going to be attending. Ontario, California is next week. San Diego, California will be in a few months, I believe September or October. We'll be in New York next month. So if you can make it to New York, it's going to be a big one. We already see the numbers coming in. Anyway, just check there. So that's the top of the funnel. We'll have 1,500 to 2,000 people that come to that event or more. And then what we do is we just give them tons of value and content. We give them 2 opportunities to get more information by deep diving into either a real estate masterclass or a Money is Masterclass, which talks about making money, keeping money, protecting your money. Those events, we play with the price points, but let's just call it $300 per person. They funnel into this incredibly well put together event that they get a lot of education value at for $300 a head. And we may have, 300 to 500 people there. But at that event, they get so much value, and they're so impressed with the event that they realize there's so much more out there and they want so much more. So a percentage of those people buy into the Money is or Think Realty Mastermind, which has typically on average a $15,000 annual membership fee, which is not that high. It's not that much. There's a $2,000 upsell on that as well. So it could be as much as 17,000, but they buy into that, and then they become part of that Money is or Think Realty Mastermind, where they get assigned an individual counselor, if you will, coach. They get weekly calls with different industry subject matter experts from all over the place. Monthly Zoom calls. They have 2 live events out of 4 a year that they can attend, which are live in-person real masterminds. And all kinds of other value. There's a dedicated app that they have where there's all kinds of video content and libraries of video, and there's just so much more. But that's what they buy into. So that model is a $15,000 annual membership fee that they not only will likely renew, certainly a good percentage of them will, but we also will cross-pollinate or cross-sell them into the other mastermind if they're not a member in the other one, and probably provide them a discount for doing so. But that's at a high level the numbers, if you will, the revenue model. And what we are seeing unfold is people are actually, I shouldn't say people, we are seeing the numbers unfold exactly how we've planned it on our pro formas, which means that in a 12-month period, we will have a $60 million top line revenue and about a $30 million bottom line revenue on each mastermind. So that's why I get really excited about that. We have a team of about 60 people on staff right now that run everything from content creation to event planning and coordination to investor relations to, well, I shouldn't say investor relations, investor as in our members, member relations. That's what I should have said. So we have a great team that we've assembled. Anyway, that's a long answer to the question, but that's how it works.
Yeah, and I can hear the passion behind it. Like, it's an exciting thing. And for me personally, coming from, a space in a previous career in terms of the live event space, what you and Eddie and Andrew are doing is phenomenal, right? So, all right, another question here. It's a good question. We hit on this a little bit earlier. Someone asked, how long are the notes? Are they 12 months, et cetera?
If you would like an interest-only note, you can choose a term from 3 years to 7.
Yep.
Pretty straightforward. People have asked us for longer term, like 10. We've done that because some people want to put it in their self-directed retirement accounts and lock in to that fixed rate for as long as possible. And that's fine. Just make the request. But if you go to our website, actually, you won't have access to the form, but because you'll get it from Nate or one of our team members. But there's a profile form online that you fill out. It takes you like literally less than 2 minutes. You have a choice of 3 to 7, but if you wanted a different term, you'd have to just request that. With an amortized note, which is less popular, but we can do an amortized versus an interest-only note, your options are 5, 7, and 10 year. We just have a longer term on those, just because the monthly payments are larger because they're principal and interest. So again, that's an option, but most people just go with the interest only, and it's fine regardless of which one you choose. Did I answer the question?
Yes. Yeah. Just talking about terms. Yeah. Super simple. Interest only, 3 to 7 typically. Amortized 5, 7, or 10. So those are the options between the note offerings. And again, we can have that conversation with us and teach how to get started. Good question, Larry. Larry asked, are these Reg D offerings?
Correct. Yeah, they are. They're Reg D 506C. It's a Reg D 506C filing. That's the offering.
Perfect. Do we have international investment opportunities? Can we deposit the interest in an offshore trust account? That's an interesting question. That might be more of a CPA question, but anything to add to that, Marco?
Can you be an international investor? Yes, you still have to meet the accreditation requirement, regardless of whether you're in the US or not. So it doesn't matter where you live or where you're a citizen, you still have to meet the same qualifications.
Great. And for anybody who doesn't know, the accreditation qualification is $200,000 for the previous 2 years on individual level, $300,000 combined with your spouse for the previous 2 years, or $1 million in net worth. So that's what qualifies you as an accredited investor, and that's part of the process. If we're going to invest in Norada Capital Management, we need to get that what's called an LOA, a letter of accreditation, from you. Which again, we can talk about that process. Let's see here. It's a good question. How are we managing risk in the current economy?
Well, it all comes down to what you're investing in, and what the economic impact could be on any particular type of investment. So what we noticed during COVID, as well as recessions in the past, is that e-commerce based businesses tend to do well. In fact, during COVID, they did incredibly well because people weren't able to go out, didn't want to go out, or couldn't go out to shop, in the brick and mortar stores. So e-commerce sales really took off because more and more people were shopping online just because they couldn't go, or they, wanted to just, they were home, had to stay home, or they just chose to shop from home. So we're pretty content with our positions on the e-commerce side. When it comes to financial education, people always want it, whether we're in good times or bad times. People are always thinking about their finances and improving their lifestyle and their financial position. And so when it comes to financial education, there's always a hunger and thirst for it. So we're pretty strong in our position about, the Moneyist Mastermind, Think Realty Mastermind, even Power Room. So we don't see that being impacted significantly if we were to have another recession, which, arguably we could see, a mild recession in the horizon. If you don't want to make the argument that we are already in a recession, it just depends on what perspective you look at that from. But essentially, in terms of mitigating risk, we look at three basic things. One, how do businesses perform in recessions and economic pullbacks, which are always temporary. Two is, when it comes to real estate, which is a very, very, very small percentage of our holdings, do people need a place to live, and is it a desirable location, meaning the market and the neighborhood, is it highly desirable? And when it comes to the masterminds, we know that they just do well in good times and bad, because people are always looking for financial education. They might pull back in their their spending, their discretionary spending in times of recession, but again, it's temporary and it comes out 6 to 18 months later. And there's always ways around that too. You just, increase your marketing. You just market to more people with better marketing, and you can draw in more people that you need to, keep the businesses on track or profitable.
I think something to add to that. Go ahead, Marco.
Just one real quick. Our theatrical productions, we've got 7 or 8 theatrical productions. The one that's running right now, which is very exciting to a lot of people, not just myself, is the Neil Diamond musical. It's called A Beautiful Noise. We opened on December 4th, and it's doing incredibly well. In fact, it's one of the more profitable Broadway productions running right now. If you haven't seen it, definitely go and see it. If you're in the New York or New Jersey area, definitely go see A Beautiful Noise. Yeah, we're the largest backer on that production. In fact, we have a board meeting this afternoon in less than 2 hours on that. We do a monthly board meeting every month. But yeah, that's just a great production. So it's based on Neil Diamond's life. It's just basically his living biography, and it's got all his music. And for those of you who don't know, all of the music Neil Diamond wrote was about himself. It was about his life. He was basically journaling his life. But it's an incredible production. You'd love it. In fact, just the other day on July 4th, PBS did a 1.5 hour special, a July 4th special, which they do every year. And we had our entire cast, not the entire cast, most of our cast on the PBS special. And they did 5 songs, like abbreviated songs that went back to back. It was amazing. And the cool thing is we didn't have to pay a single dime to be on national TV to get all that exposure, which was wonderful. But there are other productions like Harmony and Broadway Vacation, based on National Lampoon's Vacation franchise with Chevy Chase. That's ready to go. We're just locking down a theater. We have Joy. We have The Devil Wears Prada coming up. Notebook, based on the movie and the book. The Sign and Sidney Brustein's Window just finished playing a 10-week run, so that did very well. And then we have 2 others. Harmony's coming with Barry Manilow, another production that's getting ready to go live this year. The reason I bring those up is, as much as they're exciting, it can be very profitable. Those are the one things that I think are the most sensitive to economic conditions, i.e. COVID, because what happens is, That's certainly discretionary spending. So we do see a slowdown or a pullback in theater sales and ticket sales. The worst I've ever seen was COVID, because everything was literally shut down. But during recessions, productions still do well. It's just your seating capacity goes down a little bit. Instead of having 80 or 90%, ticket sales and occupancy, it might drop to 60, 70%. But again, it's temporary.
Yeah. Love it. All right. Jump in a few more here. And Marco, we're at the 45-minute mark. Do you want to keep chugging along here, or do you want to reserve some questions for email responses, things like that?
No, let's do a few more.
Okay.
We've got some good ones here. If
Great.
If people need to drop off, they can drop off.
Yeah.
But again, reach out to Nate or the team if you have more questions.
So this is a good question. Does Norada Capital own 100% of all 25 companies in the portfolio?
No. We, with few exceptions, they're not 100%. They're varying percentages. It could be a third. It could be whatever it is. It just depends on the venture. But it's irrelevant. I mean, the rate of return in terms of what we expect to receive in terms of cash flow, which is our cash on cash return, as well as the equity and what that is going to be worth in the months and years to come, it's all prorated. It's all percentage. So whether we have a 10% or 50% or 100% ownership in something, money invested in those acquisitions and ventures are just paid in a prorated basis back to us. So no, it's not 100%.
Okay, got it. All right. How many instances when customers haven't gotten 12 to 15%?
That's an easy one. 0%.
0%. Right.
0%. Yeah. There's never been a default since 2012 on any notes that I've ever issued. They're always paid in full.
Got it. That's a good track record. Are these promissory notes registered with the SEC?
You don't register a promissory note, you register the filing. So you have an offering, you fill out the forms, the Reg D forms, and you file it with the SEC. It's not the note itself, it's the offering.
It's the offering. And correct. Yeah, there is a 506C Reg D offering for Norada Capital Management.
Correct.
Let's see. Larry's talking about, okay, I need $5 million secured by $42 million historic buildings. This would be a LOC. Larry, I think you're referring to borrowing money from us. We don't actually lend out money to investors. We're the ones that actually, we actually get money lent to us. How many notes have been successfully closed so far after maturity? That's a good question. Since 2020, I mean, we've had some people definitely close their notes this year. Do you know the exact amount on that, Marco?
Not the exact amount. It's probably close to 200. There's about 200 notes paid off. Yeah. And side note, many of those investors came back either right away or like several months later saying, hey, I just can't find anything else out there that's high yield. And, your performance has been perfect with the 2-3 year note that they've had. And they're just thinking, okay, well, what are my options here? Do I go into the stock market? Do I look for other notes that are paying, 6, 8, maybe 10%? A lot of people do end up coming back and reinvesting. So.
Got it. Love it. All right. Can you reinvest the monthly payout back into the note?
Yes and no. So we're not set up to have your interest payments or your distributions automatically reinvested, which would be compounding. Can't do that. We're not set up for that. But what you can do is just accumulate the distributions, stack it, add additional capital, investable capital if you have it ready to deploy, and just take that chunk measured in thousands. We don't want $617 added to a note, but you can take whatever that is, that $5,000, $10,000 or more, and just reinvest that. If it's a small amount, we'll just reissue a new note and add that additional investment capital to the original principal, just make a larger note with the new capital. If it's a larger amount, you can have a separate note, or we can still combine it into a new note, a reissued note, which replaces the old note, essentially pays that off and creates a note. So that's how you would reinvest, if you will. But the distributions are not automatically added to your principal for compounding. We're just not set up that way.
Got it. Good answer there. All right, this is a good question. Can you get a recording, Raj? Yes, you can get a recording. We'll be our marketing guy Steve will be resending this out, so just keep an eye out on your email. Let's see here. Good question. Why do you have to work through only certain investment companies to use your IRA as the investment vehicle? There's a couple ways I would answer that. Do you want me to answer that? Or do you want to take a stab at that one, Marco?
No, I know you're well versed in that, so you take it.
So the way I'm receiving that question is, if you're using an IRA for investing in promissory notes, you do have to go through what's called a self-directing process, what's called an in-service rollover. There's only certain companies that will allow you to invest in things like real estate or promissory notes or alternative investments. So maybe your money is at Fidelity and Fidelity has a self-directed IRA option, but typically that type of account at Fidelity is not going to allow you to invest in a promissory note or real estate or something like that. So you would self-direct your money to a specific type of custodian, like a specialized IRA or an equity trust, for example, who we partner with, to invest and create that note. So I'm not sure if that's exactly what you were asking there. I think they put their name as MyPC, but anything to add to that, Marco?
No, that's exactly it. It's just you got to work with the right trustee or custodian that allows you to self-direct. Technically, by law, all retirement accounts are self-directed. It's just the custodian that you're with that prevents you or ties your hands behind your back, saying you can only invest in this menu of items that we will allow. So
correct.
Yeah.
All right. Another good question here. Will we receive any financial statements throughout the year or just a K1? You actually receive a 1099. Correct, Marco?
Correct. Yeah, in January.
Let's see. When and where will the Ontario, California seminar be? How do I reserve a seat? Great question.
It's exactly a week today. It's next Thursday in Ontario, California. Again, the website is aspiretour.com. Just go to Aspire, ASPIRE, aspiretour.com. I wonder if I should just put that in the little chat while we're talking here.
You can do that. Yep.
Just make it easy for everybody. Would love to see you there. You can get tickets for as little as $47, and believe me, it's well worth it. You're going to get 10 times that value easily. And if you do go, come say, I'll be there. Come say hi to me, please.
Yeah, come say hi to Marco in Ontario.
Yeah.
Well, in regards to building houses, you're ready to start, to full credit, ready to start. That's we're not lending again. That we're not lending money to build out real estate, or we're not becoming a private money lender. So you want to reach out to a private money lender or a hard money lender to get the process started for those build out on your 4 houses. Jason asks, are the Norada financials public or are they filed quarterly?
It's not. We're not a publicly traded company, so there's nothing filed. It doesn't need to be. No private company files has any requirement to file, nor is there anywhere to file. So that's not applicable.
Okay. Let's see here. What is the penalty for early withdrawal of our principal investment if we need to exit?
If the investor needs to exit, you mean?
Correct. Yeah.
Well, two-part answer. There is no penalty, but at the same time, I will say that there is no withdrawal mechanism. Like when you're invested, you're vested, like you're locked in. Now, having said that, should you have a hardship or like medical emergency or something like that, that's a case-by-case basis. Just reach out to us. We've had a few investors in the past that have had like emergencies come up, and they were in a situation or a pickle that they just really needed the help, and so we did just pay off their note. Like we just cashed them out. So do we do that typically? Like no, it's not like an open option, but if you're having an issue, like if you've got a real emergency, yeah, definitely contact us and let us know.
Sure. Yeah, well, always loved and respected that answer from you, right? That's what I tell my clients as well. Like if you know Marco, if you know the type of person he is, if you're having a hardship, let us know. What is the minimum needed to invest, and can I invest as a custodian for a minor if I am an accredited investor?
Only you can invest. You can't put the minor's name on the note
Yeah,
because the entity or the name on the note is the person or the entity that we are qualifying, or you are essentially saying is the accredited individual
yeah,
or entity. So, if they've lent you the money and you're making the investment with their money, that's your decision and your business, and it's something we don't need to know about, but you're the one who's putting your name on the note, so it's really you.
yeah. And the minimum investment needed, typically we start with 50K for the minimum investment into Norada.
Yeah, and just so people are not confused, when you go to the website noradacapital.com, it does say there the minimum is, I think, 20 or 25,000 for a interest only note. That's relatively new. So technically that is the minimum as of right now.
Good.
But having said that, most investors are coming in at 50 or 100. If I'm not mistaken, I think across all hundreds of investors, the average is about 125. If I was to
Yeah,
take
we
an
just
average.
120 to 130, I think is what we came up with a few weeks ago.
Yeah.
And then woman, no, we do not provide funds for new construction loans.
Well, hey, having said that, the Norada Real Estate Funding does. So it's our sister company to the real estate
There
company.
you go.
Just contact Kathy. Just call our 800 number or email Kathy at noradarealestate.com and just ask her about the non-QM loans that we have. We do have fix and flip loans. We have 30-year fixed rate loans. We have bridge loans. We do have loan products available if you're trying to fund a real estate venture or project. And if we can't help you, we'll certainly put you in touch with companies, lending institutions that we work with that can help you. But I always forget to mention, our sister company, Norada Real Estate Funding. We do have all kinds of product there for you on the real estate side.
Yep. Last question here, Marco. Actually, no, we just got another one here. Are there any usury laws broken in California as the limits to 12% rate cap? Are you referring? I think he's referring to. Is there a cap on? So we obviously borrow money at 15%. We're paying out a 15% return. Which is over 12%. I'm not exactly sure what you're asking, Trikar. Do you have an idea what he's asking there, Marco?
I have an idea. I'm not exactly sure the specifics of his question, but to my knowledge, there is no usury law implication, and that's probably because this is a Reg D filing. It's basically a national filing with the SEC, which as I'm not a securities attorney, but my understanding is when you file with a Reg D filing, a 506B or C, that supersedes things at the state level. Like it,
yeah,
you can have a filing at the state level and just operate within the state and not raise capital outside state lines, or you can have a federal filing. Again, I'm not an attorney, but that's my general understanding of it.
Let's see. So last question here from JC. Once we invest, is there a way to see how much we have accrued? For example, will we get login and password to see our income?
Well, you wouldn't need it because the distributions go straight to your account, whatever your bank account is, whether it's with Wells Fargo or if it's your IRA. You'll see the monthly distribution drop in. It'll be on your statement right there, and you'll be able to log in and see it in your account anyway.
Correct, exactly. Remember, guys, we make direct distributions directly back to you on a monthly basis. So
right.
Great. Well, that is well done, Mark. We hit them all, which might be the first time we've hit all of them before. Guys, we appreciate you joining us today. Again, I want to reiterate, if you want to book an appointment, get started, have more questions, go to noradacapital.com. You can book an appointment directly through the website. You could email me at nate@noradacapital.com. So there's multiple ways to contact us and get your questions answered, get the process started. It's super simple. So
Thank you, Nate. Appreciate it. And if they're still on, just a quick shout out to a couple of my longtime friends, Mr. Steck and Mr. Fuller. So you know who you are.
Perfect. Well, thank you, Marco. And we'll chat soon. Okay.
All right. Thanks, Nate. Appreciate it.
Take care, everybody.
Yeah, bye-bye.